In this presentation, we will take a look at Circular 230, Regulations Governing Practice Before the IRS, the Internal Revenue Service. Circular 230 sets forth rules which must be followed by all paid tax preparers. So if we are a paid tax preparer, we're receiving funds for preparing tax returns for others, then these rules apply to us. Includes ethical standards and expectations. Included in these rules, these will be things that the practitioner needs to do as opposed to things that the practitioner must not do. So we're now adding the idea or looking at those components that the practitioner, the paid practitioner, needs to do. Paid practitioners need to sign all tax returns they prepare. So the IRS, when we provide the tax return, if you're a paid tax preparer and you provide the tax return to the IRS, they're going to want to know the information not only about the tax payer, the person that's going to be paying the tax, but also the information related to the paid tax preparer. Provide a copy to the client. So we want to make sure that in this point in time, oftentimes there's going to be e-filings. We want to be able to e-file. We want to make sure that we have the proper authorization in order to do that. Typically, that's going to be the typical way that it would work. And we also want to make sure that in some way, shape, or form, we're providing a copy, making sure that the client has a copy of that information as well. They should have a copy of the return records to the clients. So when we get the information from the clients, records such as W-2s, 1099s, and so on and so forth, those are not our information. Those are the records of the clients. And we want to make sure that we give that back to the client. Now, we may want that supporting documentation, make copies of that type of information. However, we want to provide that information back along with the return. So typically what would be expected would be that the return would be prepared. The return typically, once authorized, filed, given to the IRS in some way, shape, or form, typically in an e-file fashion. The copy of the return then given in some way, shape, or form back to the client along with the source documents, the documents that belong to them, the W-2s, the 1099s, and so forth. Exercise due diligence and best practices. We want to make sure that we're doing what is necessary for practicing due diligence, making sure that we have done the procedures necessary to put together the return in a way that under the circumstances, based on what we have, we've done the procedures to make it an accurate return and follow best practices to make sure the return is done accurately and to the best of our abilities there. Notify, and I'm paraphrasing this, of course, and summarizing these up. So you can take a look at the Circular 230. We'll provide a PDF copy as well, so you can go on it, but obviously it's at the irs.gov website, so irs.gov, and you can look that up. Notify clients of errors on a client's return. So if we see an error on the return, we should be notifying the client of the error. Provide information to the IRS, the Internal Revenue Service, and inform a client if the client made an error. So notice when you're thinking about the errors, what you want to basically be saying is, if I see an error, it's my responsibility to basically bring that to light. And that means, well, so what you don't want to have basically in your head is saying, well, what if there's an error and it was already filed or something like that? And so maybe want to look at it at this point in time. No, if you see an error, you should basically bring that to light if it is an error. Or you might have information where you say, well, the client made an error possibly in the data input, and you're putting the information into the client. You don't want to have the set of mind or the mind frame of saying, well, that's the client's error and it's not my error, and therefore it's not something I need to bring to light. And you might possibly think, well, it's the client's error. They're giving me these numbers. There's clearly an error. Maybe it's beneficial to the tax refund or something, but it's not my error. It's the client's error. Well, if it's something that basically you look at and you say, well, this clearly isn't right. There's a problem. There's clearly an error here. Then you want to bring that to light. So bottom line, no matter who the error was on, the best practice is to say, hey, there's an error. It might have been my fault. It might be someone else's fault. We want to bring that to light at this point in time. Paid tax preparers have to obtain a PTIN, which is a preparer tax identification number that is renewed every year. So the PTIN going to be renewed every year. You can go on to the IRS website, irs.gov, and get more information on the PTIN process. If the paid preparer is not a CPA, certified public accountant, attorney, or enrolled agent, they must pass an exam and do continuing education each year. So, once again, if they're not a certified public accountant, attorney, or enrolled agent, they're going to have to pass an exam and do their continuing education. Now, of course, if they are something like a CPA, attorney, or enrolled agents, those are going to be regulated within their own systems, right? So if you're they're going to be, if you're a CPA, you're going to have to renew your CPA license periodically, and in order to do that, you're going to need some kind of continuing education as well, but it will be governed by the governing body related to the certified public accountant designation, as well as an attorney and for enrolled agents. So they're all going to have their kind of rules and regulations to maintain the CPA, attorney, or enrolled agent, or to be able to be a paid tax preparer in some format. And usually, under all those conditions, that's going to include some type of format of continuing education.